Welcome to Smart Crypto, the channel where you will learn how to make money in the crypto market. Hi, my name is Luke, and in this video we will explain the main differences between trading and investing and help you to find out what you are, an investor or a trader. When you think about people who invest, two types generally come to mind: investors and traders. The stereotypical image of a trader might be the frantic floor trader, yelling orders out across the trading pit, sleeves rolled up. Traders generally buy assets with the intent to sell them when the price has reached a particular level, usually within a short time frame, in hopes of making a profit. On the other hand, an investor might be the white-haired guru who knows everything about the details of an asset and focuses on building a portfolio that grows over time. Investors generally buy assets and hold them with the expectations that they will grow in value and for the purpose of generating income. Typically, they do not intend to sell, even when times are bad. Now, these may be extreme stereotypes, but they do represent some key differences between the two types. You might now be asking, am I a trader or an investor? Which one is better? And how do I know? To answer these questions fairly, let's evaluate traders and investors in an apples-to-apples comparison. This can be done by breaking down how traders and investors differ in three main ways: time frame, activity level, and risk management. While there are some common elements, traders and investors approach these elements in a different way. First, look at it from a trader's perspective. Traders typically look at the market as a place to seek quick, short-term gains. Their focus is to figure out how to get in and out of a trade with maximum profits, so they can do it all over again. This attitude results in traders having a shorter time frame horizon for buying and holding assets compared to investors. Second, traders' activity levels are different. Activity means trading, and the trader needs to know when to get in and out of a trade. For many traders, this means analyzing price charts and other signals. Reading charts is called technical analysis. Finally, there is risk. When it comes to risk, traders often see risk in light of a probability of success. Traders use stop losses and price targets to create trades that have a predefined risk level, which helps them to calculate the probability of success. Now, let's have a look from the investor's perspective. Because investors want to generate earnings from the appreciation of the investment and income from the investments, their time frame may be considerably longer than that of traders. In fact, investors may simply buy an asset and hold it indefinitely with no plan to sell based on time. Just like traders, investors have some means to determine when to enter an investment, but unlike traders, investors typically do not have a specific plan to exit the asset at a particular price. For investors, risk management is a function of picking the correct investment in the first place. Price fluctuations are simply an acceptable part of the asset's life. And if the price do drop, investors tend to believe that it will go up again in the long haul. The amount of activity that an investor engages in is generally speaking much less frequent than that of traders, and is often confined to simply adding new assets to a portfolio over time. Evaluating the fundamentals of crypto assets is much more difficult than in the normal markets, because much of the valuation of cryptocurrencies is based on speculation about future adoption. Since there is no centralized entity managing them, there is no accounting information, revenue, or profits to analyze. Instead, investors in crypto assets will look at other factors, including the underlying technology of a network, protocol, or application, crypto economic models, token emission, rewards, security incentives, the background of developers participating in a project, third-party software integrations, which businesses are using a network or application, the number of users, government support or opposition, political concerns like decentralization, privacy, and so on. Investment in crypto markets, like traditional investing, is all about choosing sound investments that will grow over a long time. If you are asking yourself, am I a trader or investor? You are not alone. Let's analyze this question by exploring what-if scenarios. You might be a trader if you like the idea of buying and selling assets. You buy based on price movements. You have no interest in the asset's underlying value beyond the movement of the asset price. You might be an investor if you have a strong conviction about the long-term prospects of the asset's growth potential. You are uncomfortable jumping in and out of the market based on short-term price fluctuations. So, which one are you? Over time, you will find out that you tend to lean one way or the other, but you probably have some elements of both of them. You may have a large part of your portfolio in long-term investments, where you act as an investor, and you may have another, likely smaller portion of your portfolio dedicated to active trading. When it really comes down to it, the answer to the question, trader or investor, may simply be yes and yes. The most fundamental questions you should ask yourself are, how much time can I dedicate to the investing or trading activity? And this answer may very well change over time. What are my portfolio returns expectations and related risk appetite? And this answer may also very well change over time. Let's summarize all this in a table. Depending on how much time you have available and your risk appetite, you can either be an investor or a trader. If your risk level is low, then you probably want to focus more on the longer term and act as an investor. If your time horizon is short, then you are more a trader type of person. In our future videos, we will always refer to this table and explain the skills you need to become consistently successful. If you like this video, please give it a thumbs up. If you are interested in finding out more, be sure to subscribe to our channel so that you don't miss out on any of our future videos. Thanks for watching, and in life and well-being, see you in our next video.